What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is August 17th, 2022. Well, these poor location longs, they're finally feeling the first bit of pressure that honestly they felt for this entire almost 2-month rally that we've had in the indices. Let's start off with our box scores. S&P 500 finished down 0.71%. Our NASDAQ QQQ finished down 1.14%. IWM small caps, we have a massive short in those small caps, was down 1.68%. Dogs of the Dow showing relative strength once again, only down 0.45%. And our ARK Innovation ETF got hammered, down 5.34%. Sorry, Kathy. And take a look at where everything closed. It's not like we closed on the lows either. We pretty much closed towards the middle end of the day's range for almost all these indices except for the ARK Innovation ETF. We did have a volatility expansion, not a volatility crush. And take a look. But to be honest, let's look at the expansion that we had. Is this a big vol expansion? No, not really. The S&P 500, the VIX was only up 1.07%. That's nothing crazy at all. So this shows we did have a small move down in the market, but there was no panic by any means. But our breadth was pretty abysmal. We had 17% advancers in the small caps, and we had only 19.5% up volume on the day. The trend model remains at a +1. Remember, we did get a sell signal from our overheat model 2 sessions ago, and we went from being aggressively long in May to flattening out our book into the end of last week. And then we ended up flipping net short, added some shorts yesterday, and today was a pretty good day. Finviz heat map, we see that the semiconductors were very weak, and we see that energy stocks were showing relative strength. Also, we must talk about Apple. I entered some Apple puts. Some of our members in the Pristine Capital trading community put on similar exposures, and Apple is just like, this is like the stock that is just leading the entire rally in the S&P 500, and it just won't stop. Can't stop, won't stop, baby. Other than that, pretty much everything was kind of like, bleak. There were some standalone winners like Eli Lilly. Sectors, this was a bloodbath. The only sector that closed out green for the day was energy. XLE was up 0.83%, but you'll notice all of our top momentum sectors finished out pretty deep in the red. So whoever was getting long into yesterday's highs, fortunately or unfortunately, they pretty much got obliterated in today's session. Style factors, these high beta stocks led the sell-off. They were down 1.94%. Remember what we talked about in yesterday's video. We talked about, hey, we've seen this before. The meme stocks rally. Then you get everyone throwing their money into min vol. So remember that for next time. Get smart on this. Typically, you see big inflows into minimum volatility right before market corrections. Definitely worth noting that. And then take a look. Let's pull up the indices, and then we'll go to some of our trades for today. Let's just see what happens. So S&P 500, again, it is not like we closed on the lows by any means. And is this a big pullback in the market? No, this is really just like one day of consolidation practically. We're still above the 5-day EMA, and we're still trading just below the 200-day simple moving average. So we do have options expirations coming up on Friday, and we know that there's a high level of options open interest at the 4,300 strike on the S&P 500. Keep in mind, about 30% of the dealer gamma, meaning the open interest, is going to roll off for the S&P 500 this Friday, and about 30% of what we have in the NASDAQ is also going to roll off. That tends to be a bit of a momentum shifter. It allows the market to move a bit more freely. But for right now, we're pretty much pinning by this 4,300 strike. Now, I'm trying to take a little bit of a longer term view and go, hey, I think this OPEX could be a turning point. We're seeing a lot of different indicators. We've gone through all of them in depth that lead us to believe, hey, the market could be heading for a bit of a pullback. But I know that Thursday and Friday into OPEX, there's still a chance that they close the market at 4,300 or maybe even higher, maybe 4,305, 4,310. Is that going to make me change my thesis and cry into my soup if tomorrow the market's up? No, it's certainly not. I know that at this stage in the process, I just need to be patient. But take a look at what we had here on the NASDAQ. NASDAQ down 1.08%. And you can see we did pull back to the 10-day EMA on the NASDAQ. Russell 2000, this one took it the worst. And remember, Russell 2000 has really been leading the advance for the most part. Russell 2000 also pulled back to the 10-day EMA. And look at this. Let's go to our hourly chart. We did pull back inside of this weekly value area. And when the Fed minutes came out, let's talk about those. So all we can really say about the Fed minutes was there was pretty much no new information. Remember, the Fed minutes, it's a summary of what happened at the last Fed meeting. The last Fed meeting was a couple of weeks ago. And remember, everyone thought, oh my gosh, this is a huge dovish pivot from the Fed. And the market's been trading off of that potential dovish pivot for about 2 months now. That's why we had this huge rally. So we did have an intraday rally when the Fed minutes came out. We moved off the lows. Pretty good stuff. But unless you're an intraday trader, it is tough to trade off of that. And I try to wait for the close because there is some noise around that FOMC report. If you're an intraday trader, they're pretty much going to stop you out when that comes out. Now let's take a look. Last but not least, our big winner for today, the dogs of the Dow. Ladies and gentlemen, barely down on the session, still above the 200-day simple moving average. And I do notice these dogs of the Dow, they tend to outperform when the market's weak, and they tend to underperform when the market is strong. Now let's check out Apple because I think this is just like a pretty crazy occurrence what's going on here. So Apple finished out the day positive, even though the S&P 500 was negative. Very nice relative strength. We are approaching this Venom R1 pivot, and you can see we had a candle on nice high volume, but it looks like the top in Apple was sold off. Now let's see where we are in terms of the weekly value area. Yeah, you can see we're well above this weekly value area high. We do have a Venom R1 pivot up here right around 180. And this stock is getting pretty darn close to the prior all-time highs. Is the market just going to rip this one higher up to like 200? I highly doubt it. I think we're getting towards the end of this Apple run. And when I say the end, I don't mean like, oh, Apple's going to go into the abyss. I just mean like, hey, maybe we get a retest of like the 10-day EMA or the 20-day simple moving average. You never know. Am I right? So let's take a look at my trades for today's session. What did we do? Again, remember, we came into today net short. So this was actually a fantastic day for us. And so check this out. We closed out 25% of the HUD 8 September 16 3.5 strike puts for 71 cents. We closed out another half of those for for 76 cents. Yeah, that was down here. Closed at another 25%. And we had originally paid 49 cents for those. So about a 50% winner in HUD 8 mining. And this is crazy. We took HUD 8 mining on the long side via common stock and traded it for a massive winner, sold the position. Then the other day we took put options in HUD 8 mining and we just got another winner there. And this isn't always how my trading goes, trust me. My historical win rate is somewhere between 40% when I'm trading very poorly, 60% when I'm trading lights out. My win rate so far for 2022 is above 60% right now. So I'm not expecting this to continue. I'm actually expecting within myself, like I always say, the devil comes for you after your best trade. So I want to make sure that I'm not getting like careless or thinking this is like a new paradigm where just every trade I do works. But we're taking the blessings when they come, honestly. So we did get long some Apple puts for $7.70. We got long some November 170s. And we also took a little bit more of those for $7.65. The one long trade that I put on, I got long some Oxy, January 20th 65 call options. And I just put this group continues to look very close to making an advance. And I want to get some skin in the game in case it happens. Now, Oxy, I'm just noticing, remember, XLE, the energy ETF, was the only sector to close green today. Look at Oxy. This is Warren Buffett's big position. Now, this one, did it close red? Yeah, does this candle look pretty disgusting? Yeah, kind of. That's why I just entered like a starter position. And we'll see what it does, but these call options are for January of 2023. So we do have a couple of months for this thesis to potentially play out. And I was just so up to my eyeballs with shorts that I was like, hey, let me get long, like at least like something. Now that the market's moving down a little bit. But to be honest, I think from here on out, we're in what I believe is the correct position. I think these longs are just starting to feel the pressure. I don't really think they felt anything yet. So these sell-offs, same thing with these rallies, they can take weeks to occur. So I want to make sure that I don't let a 5-minute candle mess me up. I don't let an hourly candle mess me up, because I'm thinking beyond this option's expiration. So we'll see what happens. Thank you so much for tuning in, watching these videos. You guys are all awesome. Please go ahead, click the like button on the video. Also subscribe to the channel. That really helps give us more traction, spread the word of Pristine Capital, and we'll see you all tomorrow as always.